Well, the results are coming thick and fast, and traditionally we have always tried to bring our viewers up to speed with an indication of what we should expect in various sectors. The pharma sector has only seen Syngene, so this is the last edition of our Quarter Se Quarter Tak this season. We're going to look at what the pharma sector may hold for us. Ekta, over to you.
Well, thanks for that. Pharma companies are expected to report what would be a healthy Q4 FY19 led by the US business. Overall numbers are expected to grow around 9 to 13%, with the US growth estimated at around 8 to 10%, led by factors such as stable pricing as well as key launches. Gains in key products Lupin, Natco and Cadila will, for example, benefit from Tamiflu generic sales as the flu season picks up in the US. Dr. Reddy should generate around $10 million of sales from the relaunch of the anti-drug addiction drug Suboxone. Lupin launched angina drug Renexa generic with exclusivity in Feb 2019. It could rake up to even $75 million in terms of total sales from this particular drug, while Biocon should continue to benefit from sales of the cancer biosimilar drug Pegfilgrastim, which it launched in June 2018 in the US. Other factors to watch out for will be the domestic market growing around 9 to 13% versus an average of around 10% industry growth. Divi's Labs, for example, is likely to continue benefiting from the shortage of APIs in China. Sun Pharma Q4 is likely to be impacted on account of the inventory write-back due to restructuring of the India distribution business. Lastly, rationalizing cost and R&D in order to protect margins is another key theme that we could see across companies. Commentary is very critical for pharmaceutical companies. 2019 has started out as a choppy year when it comes to regulatory issues such as the warning letter to Jubilant Life's Roorkee plant. Commentary on US pricing and launches will be watched closely as well. Let's leave you with the valuations on a one-year forward basis. Valuation-wise, a lot of the companies are now trading close to their historical averages of around 20 to 22 times, with Biocon obviously as an exception.
Okay, well, Ekta, thanks a lot for that. So those are the expectations from the pharmaceutical space this time. Amey Chalke of HDFC Securities joins in now here in the studio. Amey, hi, good morning. In fact, you were just listening to my colleague Ekta about the expectations. This year has been decent for a lot of pharmaceutical companies. Dr. Reddy, Sun Pharma, all up about 10% this year so far. What's your pick of the pack in terms of earnings this quarter?
So earnings, Aurobindo, Dr. Reddy and Lupin will report really good earnings this quarter. Aurobindo would be benefited from new business opportunities, shortages in the US market, then obviously the US dollar rate. Dr. Reddy will benefit from Suboxone launch, and they are also launching other few products in their base businesses. Similarly, Lupin has launched Renexa, and there is also benefit of flu season which will they benefit from. So these three companies in the large cap will report good earnings.
Okay, you know, Lupin has already seen a fair amount of rally from the lows of earlier this year. And then we have this news of their plant, yet another plant, or in fact now all their plants under some kind of observation from the US FDA. So what will it do to the price? Will the results be able to overcome this negativity?
So one thing which we have to see how things have changed over last 1 year or 2 years is that now these companies have many plants with them. They have diversified their filings a lot. If you take a case of Dr. Reddy, they have filed from CMOs. So similarly, Lupin has different plants for their different filings like inhalers, biosimilars or hypo products. So going ahead, the impact of all these plants in terms of both positive and negative will go down.
Okay. So from the large caps, you said that Dr. Reddy's, Lupin and Aurobindo Pharma will report good numbers. I know you track the mid caps as well very closely. What would be your top choices there? There
we like Jubilant Life because it has fallen from 850 to 680 now, and they have received two OAI setters for their plants, and both those plants incrementally will not add much earnings. So their earnings will be driven by specialty pharma and chemical businesses.
Okay. What would be the red flags in this earnings season?
Red flags, I would say some of the companies are benefiting from valsartan shortages. They could see some dampener in terms of EBITDA margins going down.
Okay, which one would be?
I believe Divi's Lab could disappoint a bit because now they have inventory with higher dollar rate, and now they would be selling at lower dollar rate.
Okay. The only expensive drug stock now is Biocon. Where do you stand on Biocon?
So we don't have coverage for Biocon.
No, I mean it's above its historical valuations.
Yeah. Overall, my view on the biosimilar is little negative because I believe that space is getting crowded, and regulatory bodies are also thinking about fixing prices rather than keeping an open market over there.
Okay. Did we discuss Strides? Because that's another stock that you like, and
yes,
you expect good numbers as well, right?
Yes. So Strides will benefit from their US recovery. They have also launched Tamiflu. They have launched many other products as well. So they will also benefit from their two key product launches. So they have exclusive products coming up in next 2 months.
Okay, Amey, thank you very much for alerting us and our viewers on what we should watch out for as the hits and misses in this earnings season for the pharma sector. Have a good trading day yourself. Okay, that's the advice and the preparation for pharma companies and their results. Let's shift back to trading strategies. Okay, before